Hi everybody, Lance from thetatraders.com here. This quick video, I'm going to go over the new news on having much quicker expiration dates on the VIX, getting a new fear index to see when there's a lot of fear and volatility in the market, and how this might play out with the zero DTE strategy that we do at thetatraders.com, and for any other shorter term time frames, how to actually possibly use this to its advantage. Again, it didn't come out yet. It's planning on coming out on Monday, on the 24th of April, 2023. So we're going to be tracking it and monitoring it and see how we might be able to benefit from seeing this much more rapid VIX. Let's get right to it. We're going to go over the article. I left a link in the description down below if you want to read it. Wall Street's getting a new fear gauge. Meet the one-day VIX. So about a month ago, Wall Street stared down the barrel of an incipient banking crisis. Investors in the world's most watched gauge of the market did a funny thing. It really didn't do much. So the volatility index, it measures the S&P 500 swings for a 1 month time period. Didn't really change much even at the intraday peak because it was hard for the market to actually understand and know what was going to happen a month from now, which is pretty much what I'm making this video in April 22nd. So since the VIX is calculated from 23 to 37 days using derivatives, it's struggling to capture the short-term volatility in the market. The VIX will move up and down from minute to minute during the day, but it's looking out way out in the future. If you're doing zero DTE trades, which has been a growing phenomenon on datatraders.com, we do sell side, iron condors, credit spreads on the zero DTE. A lot of people are doing buy side where they're trying to scalp zero DTE, get in and out in minutes or even seconds. So we're going to be adding a one-day VIX. CBOE, Chicago-based exchange operator, announced a new one-day version of its flagship volatility index. It's going to start on Monday, April 24th. If it succeeds in capturing the sentiment and options for zero DTE, it could make a big movement for the investors and traders. So much volume has moved to shorter tenures. Head of derivatives strategy at Armin Capital. I was joking the VIX is going through a midlife crisis, being replaced by someone younger with shorter dates. So by the third quarter of last year, zero DTE contracts are more than 40% of the S&P 500's volume, almost doubling from 6 months earlier. At thetatraders.com, we were doing zero DTE before it got as popular as it is today. And it is a little bit tricky to work with the market at times. Sometimes the market will move up and down. The VIX doesn't even show much indication that it should be doing that. Usually when the market goes down, the VIX tends to go up. But I've seen many days in the zero DTE strategy where that's simply not happening. So zero DTE options are contributing about 15% of the revenue. CBOE wants to make more money. Why not offer a 1-DTE VIX possible way to trade? Not necessarily blaming them for that. They might as well attempt to use it if people want it, but definitely going to be some monetary gain in CBOE if people start trading these as well, or at least if they do some research on it, maybe they'll be more willing to take more trades. I'm not sure it'll bring a new level of clarity to markets, but I understand why they're doing it. VIX complex, a well-deserved cash cow for them, so why not extract a little more milk while they can, right? So we're going to notice that they're going to have a lot of movements in this 1-DTE VIX. I'm guessing that there's a good chance that it's going to move in line with S&P 500 for SPX. So if SPX is going up, VIX might trend downward. If you see big red candles and XPS is going down, I might see the VIX shoot up in the 1-minute chart. You might be able to use this to hedge positions. For instance, if you are playing the call side and you want it to go up, maybe you hedge by selling a VIX put pretty far out of the money for the same days. If you're in a put contract for zero DTE on SPX and you want the stocks to go down, the VIX might shoot up as well. So you could maybe play a hedge of a small percent of your position where you're going to do the opposite side on the VIX. So in case one shoots up, the other one could be used as a hedge if it doesn't work our direction. So since this is an ongoing development, hasn't come out yet, well, this week, we're going to keep an eye on it. I'll do some future videos looking at the correlation between the 1-DTE VIX compared to the 0-DTE SPX, see if there's that inverse correlation that I'm predicting is going to happen pretty frequently. And we're also going to look at different ways to benefit and take advantage of these trades using safer strikes or look for potential risk reward profiles that might be more beneficial. So if you're interested in a free 7-day trial at thetatraders.com, there's a link in the description down below. I'll see you guys on the Discord, and happy trading.